Hey everyone, welcome. If you're someone who really wants to figure out the nuts and bolts of wealth creation and how global markets actually work, well, you're in exactly the right place. Today, we're diving deep into one of the absolute most popular, heavily traded funds on the planet, the Nasdaq-100 Index. You probably know it better by its famous ticker, QQQ. In this explainer, we're going to completely demystify what this index actually is. We'll pop the hood, look at how it runs, and figure out exactly why it gets so much attention from long-term investors everywhere.
But hey, before we get into all those structural details, let me just ask you a really direct question. Do you want to capture the dividends of the AI era? Seriously, think about it. We are living through a massive, historic shift right now. We're watching human civilization transition at breakneck speed from the internet age straight into the age of artificial intelligence. It's happening so incredibly fast. And if you want a front row ticket to ride that wave, to actually capture the financial momentum of that whole transition, well, QQQ is arguably the ultimate vehicle built to do exactly that.
Okay, let's dive into this. Here's our roadmap for today. First up, we'll answer what exactly QQQ is. Second, we'll look at the tech and biotech leaders running the show. Third, we'll explore its super strict stock selection logic. And finally, we'll break down the investment risks against those future dividends. All right, part one. What is QQQ? Think of it as the VIP club of global innovation. You know, when people talk about buying QQQ, they're really buying into this highly curated, exclusive VIP club. And that number, 100, that's the magic number. It literally represents the 100 largest non-financial companies listed on the Nasdaq exchange. You can think of these specific 100 companies as the heavily vetted members of our club. If a company actually makes it into this top 100, they haven't just done well. No, they've proven they have massive global scale and serious, undeniable market influence. And I really want to emphasize something here. QQQ is not just some random, boring basket of stocks. It's a vital, living indicator that measures the actual momentum of global innovation and growth-oriented businesses. When you check the daily performance of QQQ, you aren't just looking at financial jargon. You're looking at a tangible, dynamic measurement of exactly where the world's innovation is heading. It's literally the pulse of future growth.
Moving on to part two, tech and biotech leaders. These are the heavy hitters.
Now, to really grasp the power of this index, we have to look at what's actually inside it. And this brilliantly illustrates the core composition. See that massive slice of the pie taking up well over 50%? That is dedicated entirely to information technology. Following that huge chunk, we've got the communication services and consumer discretionary sectors. So what does this tell us? It shows a heavily intentional concentration. It's a stark contrast to those broader, more traditional market indices. Basically, it's a massive, concentrated bet on the precise sectors driving modern technological advancement. And within that giant tech slice, you're going to find the true titans. We're talking about key members of the Magnificent Seven, names you obviously know, like Apple, Microsoft, Amazon, Nvidia, and Alphabet. Let's be real. These aren't just big, successful companies. They are absolute monopolies. They're undisputed leaders in their fields. Whether we're talking about the global infrastructure of cloud computing, the massive rollout of AI, or the advanced semiconductors that actually make all this computing power possible, these companies run the show. They are the true engines pulling this whole index forward. But wait, here's something completely fascinating that a lot of people just totally overlook. This VIP club, it's actually not strictly tech. Nope. The Nasdaq-100 also heavily features the absolute pioneers of modern healthcare. We are talking about companies aggressively pushing the boundaries in genomics, cutting-edge biopharma, and advanced medical devices. These are life science pioneers capturing the medical breakthroughs of tomorrow. So when you're looking at QQQ, remember, you aren't just seeing software and microchips. You are looking straight at the future of human health and life sciences.
Which brings us to part three, strict selection logic. Think of these as the bouncer's rules.
So how exactly does this index deliberately pick its winners? And maybe more importantly, who does it intentionally leave out on the sidewalk? Now, what's really interesting about this slide is the stark contrast compared to the broader S&P 500. While the S&P includes legacy banks and traditional financial institutions, QQQ completely excludes financial stocks. No banks allowed. This is a huge distinction. By locking out the banks, QQQ effectively makes itself immune to traditional banking trends. So when interest rates are bouncing all over the place, QQQ dances to a completely different beat. Its movements are much more purely driven by tech cycles and the sheer scale of corporate capital spending.
Plus, unlike indices that just blindly chase sheer size or revenue, the companies inside QQQ actually share a very specific operational DNA. They don't just chase scale, they focus entirely on building a competitive moat. What does that mean? It means they have extremely high research and development spending. They're funneling massive profits straight back into innovation. And this relentless reinvestment builds immense long-term intangible asset value. It creates this deep, untouchable moat around their business that locks in their market dominance, making it practically impossible for new competitors to disrupt them.
All right, let's get into part 4, risks and long-term dividends. Let's call this the price of admission. Okay, we really have to address the elephant in the room here. Volatility. What does this actually mean for your wealth? Because QQQ is so tightly packed with high-growth tech stocks, the short-term reality is, well, higher volatility. It's just guaranteed to be a bumpier ride compared to a broader, more diversified index. When the overall market gets nervous, QQQ is going to swing much harder. But here's the necessary trade-off. You get incredibly strong, explosive growth power in a bull market. When the market is running hot and the economy is expanding, these high-growth innovators consistently offer unmatched returns. So the absolutely crucial point here is understanding the underlying engine driving all this explosive growth. It really all comes down to the compounding effect. Like we talked about earlier, QQQ captures human civilization's monumental transition from the internet era into the AI era. But guys, that's not just some flashy narrative. It's backed by hard financial math. The companies in this index boast incredibly strong earnings per share, or EPS. Their massive, constantly growing profitability is the fundamental engine driving their long-term price growth and compounding returns. You're investing in their proven ability to generate enormous amounts of cash through constant innovation. Let's move on and see how this dynamic rebalancing mechanism builds such a remarkably resilient portfolio over time. It's like an automatic 1-2-3 system. First, it constantly evaluates the index members. Second, it ruthlessly weeds out the companies that are losing their competitive edge. And third, it keeps and heavily weights the strong, growing market leaders. This automatic pruning process ensures that only the absolute fittest survive in the index. With QQQ, you aren't ever stuck holding yesterday's news. You're always holding today's champions. As we wrap up our deep dive today, I really want to leave you with this one thought. Think about it like this. QQQ is not just a tech fund, it's a ticket to the global innovation economy. Honestly, that is the absolute clearest way to view this index. It is perfectly built for the investor who wants to systematically own the specific businesses that are quite literally building the infrastructure of our future. But of course, with that incredible compounding potential comes the cold, hard reality of the market. So are you ready to endure short-term market shocks for the sake of long-term asset growth? Because your ability to objectively stomach those bumps along the way, that's the real price of the ticket. Take some time to ponder your own risk tolerance and your long-term goals. Anyway, thank you so much for hanging out with me on this deep dive. Keep learning, stay focused, and I'll catch you in our next explainer.